Hi all. Hi all. Hope it is audible to you all. Um, a very good morning. We have been here on the day 4 session, and on this today's session, first part of our discussion, section 15, followed by rule 28, 29, 30, 31, 32 till 35. I think by the time we'll reach our strategic timeout, so we will wind up the session of session 1, take a break, and then join in session 2. You have seen that is also been roasted for at 11:45. We can join in session 2 for place of supply. We'll try and see to extend the place of supply section by 15-20 minutes extra and close so that there is no carry forward effect. That value of supply. Section 15 of CGST Act and Section 15 of SGST Act discuss about place of supply. Now, as far as this topic is concerned, often a doubt will be asked, what is a need for valuation? Why I need to bother about valuation at all? Is there any purpose behind valuation, or it is just like without purposes, these are all done? Now, all that I want you to highlight over here is, in case of valuation, the laws are all very simple. Section 15(1) discuss about, or I'll rephrase it, Section 15 discuss about valuation. Section 15 has 5 subsections. Section 15(1) will talk about what will be considered as transaction value. Just for your information, that what is liable to GST is value of supply. What is a value of supply is determined under Section 15. If you are able to make a small connector between your Section 9 and Section 15, I think you will be able to Section 15 of CGST Act. Now, points for our consideration are Section 15 per se has 5 subclauses. Section 15(1) talks about when a transaction value will be accepted. Let me repeat it. Or when a transaction value will be accepted by government is discussed. When we say that, when it comes to Section 15(1), when a transaction value will be accepted, that is discussed. Followed by Section 15 subsection about when something will be included in transaction value, when something will not be included in transaction value. To be more precisely, Section 15(2) talks about inclusions in transaction value, and 15(3) talks about exclusions from transaction value. Followed by Section 15(4) comes out and says, if a transaction value cannot be determined as per Section 15(1), then with the help of valuation rules, transaction value can be determined. Section 15(5) gives powers to government to prescribe a particular method of valuation in case filmmaker beginning. Section 15(1) simply comes out and says, value of supply of a goods or a services or both shall be the transaction value. And when a transaction value can be accepted is if price actually paid or payable. Let me repeat. Any money paid or payable for such supply where the supplier and recipient are not related person, then the price shall be considered as the sole consideration of sale. To be more precisely discuss about it, there are 2 conditions that are associated here. Price actually paid or payable will be accepted as transaction value. Now, let me repeat it again. what will be leviable to GST is value of supply. What value of supply section says is any money actually paid or any money actually is payable that will be accepted, or for that supply that will be accepted as transaction value. So section 15.1 says the price charged for a supply will be accepted as transaction value provided two conditions are met. Condition number one, supplier and recipient are not related or they should not be related person. Similarly, price is the sole consideration of sale. I supply emphasis to a word here called as sole consideration. That is to say, price is the only consideration or money paid is the only consideration. Apart from money, apart from price paid, there should not be any other additional consideration associated with it. Coming back here, value of supply of goods or services shall a company or a home appliances showroom sell its home appliances to a customer for rupees 10,500. Though the MRP printed in the home appliances is, let's say, 15,000 rupees, the respective home appliance showroom sell it for 10,500 rupees. Now a question will come, can this 10,500 be accepted as value of supply? Now we'll get into this transaction with the help of this section, or we'll scan through this transaction with the help of this section. First point, value of supply of goods or services that is actually paid or payable. If a price is actually paid or payable, then that value will be accepted as transaction value. Now, points for our discussion in this topic here is that 10,500 will be accepted as transaction value provided if the supplier, home appliance showroom, and the recipient, the end consumer who is going to buy, both of them are not related, and price, that is money, price should be the sole consideration of sale. That is to say, money is the only consideration. This customer has paid 10,500 and the home appliance showroom has raised invoice for 10,500. Then no doubt, nobody can question that MRP is so much, why you sold for this price, that price. No questions can be raised by any person if these two conditions are met. Just two conditions we have. Supplier and recipient should not be related. Price should be the sole consideration. Sometimes when both the conditions are met, I'll take a hypothetical situation. It was an old model of a television, not the current trendy. They are talking of 4HD, so on and so forth. I am now before you with an example. There is an LCD TV, 21-inch LCD TV is available in a home showroom. I mean, in a home appliance showroom, it is available. This 21-inch manufactured in yesterday, day before yesterday and all, or last month and all, manufactured some 4 years before. Last 4 years, he never sold. Now, one fellow is interested in buying it. MRP is printed as 15,000, 15,000. Ask you, can this value be questioned by somebody? To test that, we will ask questions. What questions? Is supplier and recipient are related? The question to this answer came as no. Supplier is independent, recipient is independent. Customer does not know who is the supplier, that is home appliance showroom. Home appliance showroom also does not know the recipient. Good. First condition satisfied. Whether price is the sole consideration. Is the supplier is going to collect only the 3,000? If the answer is yes, the 3,000 rupees will be accepted as transaction value. I can understand some of your minds asking a few more questions. Sir, if that supplier sell for 10 rupees, can the 10 rupees be accepted as transaction value? A 15,000 rupees worth LCD TV, the supplier sells for 10 rupees. Can that be accepted as transaction value? Supply it even for 1 rupee, it will be accepted as transaction value. A best in class example to you, almost on the similar line, is this. Assume for a moment, all this COVID-19 issues, everything gets settled. A long pending wish of your home to buy a new LED, HD, 4K smart TV for some 75,000 rupees. So you took the father, mother, yourself, went into the showroom along with your brother, sister, whomever it might be. Went to the showroom, saw various model, zeroed in on a particular television model, 7.1 channel, home theater channel. Hope you are all aware of home theaters. If you are all not aware, who will be aware? 7.1 home theater channel, we will give you free, provided you buy the television today. These are all conditions, okay, marketing conditions. You buy television today, then 7.1 home theater channel, Sony, which worth some 10,000 rupees, is free. Everybody will what? Immediately go buy that TV. And the Sony 7.1 channel will be billed for 1 rupee. 1 rupee. 1 rupee means 1 rupee. We have to see some bills that you will really appreciate this discussion. This home appliance showroom, can he be questioned by the GST department or by any other person that how come you can sell a 10,000 rupee item for 1 rupee? Technically, if he satisfies section 15, he cannot be questioned by any authority as long as the end consumer only 75,000 rupees. If this be the situation, then yes, it will not be leviable. Let me repeat, it will not be. The 1 rupee will be accepted as transaction value. However, all these discussions comes with its own interpretation challenges, but from an academic perspective, make yourself very clear. When it comes to the ground of practice, all this has its own plus and minuses. But the point that I want to drive home here is, if these two conditions are satisfied, transaction value will be a situation. You decide whether transaction value is accepted or not. Mr. A is a manufacturer of machinery. Let me repeat. Mr. A is a manufacturer of machinery. Mr. A decided to manufacture a machine, and Mr. A comes up with a costing wherein which the cost of raw materials, let me repeat, the cost of raw materials is 3 lakhs. Manufacturer with this costing like this was approached by Mr. B, a buyer of machinery. Mr. B asked, what can you manufacture and give me the machine? Mr. A said, yes, I will do. Mr. B told that, and will the manufacturer be eligible to manufacture the goods and give to him? Mr. A told, whether if I buy material or you buy material does not matter. If you buy material and give, I will do only the labor portion. So points for a discussion here was, Mr. A was supplied by material by B. With the materials supplied by B, A processes the goods and gives back the machine to him. If this be the case, a genuine doubt came. Let me repeat, a genuine doubt came. The cost of material which are given by B to A. Let me repeat. The cost of material, A will not buy material. A will be responsible only for making the machine, and Mr. A collected only 2 lakhs. If this be the situation, a question before you is, can this price be accepted as sole consideration? Yes or no? This price can be accepted as sole consideration because at the time of entering the contract, they were very clear. My responsibility is only to make the machine and give it to you. Your responsibility is to pay me 2 lakhs plus supply me material. The point that I want to drive home is, don't simply conclude if additionally something comes, always the price is not sole consideration. I'll give you another example so that you can appreciate in the same discussions itself. All our erstwhile discussion of the previous example is intact, but what happened to Mr. A? If this is done, then the price is not the sole consideration. Sir, why, sir? Very simple. Apart from money, he gets something extra. If this be the case, and that extra is not in money, if this be the case, we call this as additional consideration. In case a person receive this or this kind of activity, then transaction value, or as per section 15.1, value of supply or this transaction value cannot be determined, or to put it in a different way, if the conditions are not satisfied, transaction value cannot be accepted. That is, to put it in a very simple way, assume for a moment a lot of you professionals here are watching this video, done, and your also results came, you also cleared your exams. I wish, bless, and pray for you that you all clear your exams in a more bigger way. But my point here is, once the exams are over and you are yet to decide, discussions are on, and that discussion is dumbling around your mind, at that time, because you had some time, you took one assignment, a very small assignment. I'm not mentioning the assignment at all. You took some assignment. When you are working on that assignment, you fixed a consideration. Let's say you fixed that 30,000 rupees as your consideration. The other person in your hand gives a mobile phone worth 20,000 and rupees 10,000 check. You also had no other option. You decided, okay, in any case, I have to buy a new mobile. What mobile I used in articles, what mobile I used before qualification, that I cannot use. Okay, give, I will use this. Now, core discussion of us. Let me repeat, core discussion of us is the consideration received by you for that activity. Is it a sole consideration? Have you received a consideration only in money form? If your answer is yes, then you have satisfied this consideration. Actually, for the example that we discussed, your answer is no, because you have received money 10,000 to, because the transaction has violated condition to section 15, transaction value will not be accepted. Points that we need to make a note here is like this: every transaction you have to verify whether both the condition relative. But only one point I want to highlight over here is, in case of this term relative, somewhere prepare yourself in a very great way. Why? Because this term relative is gaining its importance, and you can subsection 2 discuss about what will be included in value of supply. As you all highlighted, what will be included in value of supply is discussed in section 15.2, which has 5 subclauses: A, B, C, D, E. Unit 15.2a is going to be something to do with duties and taxes. 15.2b, C, so on and so forth. I leave that activity to you. But the point that I want to drive home here is 5 additions. What are those 5 additions? To start with, all duties, taxes, cess will be included in value except CGST, SGST, IGST, and GST compensations. In other words, but for your GST related taxes, all taxes would be included in value of supply. Let's, for an example, say basic value is 10,000 rupees. Some municipal surcharge or some municipal tax of 1,000 rupees is collected. Then value of supply for the purpose of GST or to put it in a different way, the value of supply or the transaction value for the GST rate or GST will be calculated on 11,000. So the points that need to be noted down, carefully noted down here is all duties, all taxes would be included in transaction value. Similarly, is it only duties and taxes that will be included in transaction value? If you think, no. Any amount liable to pay, supplier is liable to pay. Any amount, supplier is liable to pay. That amount is paid by the receiver. Okay, you supply me goods, I will pay him 5,000. Whenever a supplier is liable to pay some money to third person, the recipient pays to the third person on behalf. Note here that value or that amount is not originally included in value of supply. I have agreed to provide a service for 10,000. I am the supplier. You are the recipient. You said, yes, I will pay 10,000. You provide me this service. I have agreed for it. Now, very interesting to note what has happened is, I have consumed some services of third party and I supplier owe to a third party some 2,000 rupees. You say, you have also told me that you will not reduce from my value of supply. That is an interesting point here. You are not reducing from my 10,000. You will pay me also 10,000. You will also pay or ensure my liability is close to the extent of 2,000. Any amount the supplier is liable to pay is paid by the recipient, and the same is not included in reduced from the value of supply or not considered in the value of supply. Then that 2,000 rupees you paid on behalf of me, that would be included in your value of supply. Can we able to appreciate it? If at all something is difficult, your clause B, which we discussed, is difficult. Followed by clause C, a very comfortable clause, incidental expenses. Any incidental expenses incurred up to supply, up to delivery of goods, or for the purpose of supply. For supply, any incidental expenses incurred would be included in your value of supply. So coming back here, incidental expenses will be included in your value of supply. What kind of incidental expenses will be included in value of supply? When we get in, see, this incidental expenses will differ from transaction to transaction. For example, in one case, the incidental expenses will be different. In another case, the incidental expenses will be further different. So transaction to transaction, the incidental expenses would differ. Now the point here is, general incidental expenses are transportation, insurance, loading, commission, brokerage, or testing, calibrating, or installation charges, delivery charges, freight charges, arhati, many charges. All these are all examples. Understand, all will come on a broader canvas called as incidental expenses. Any incidental expenses would be included in your value of supply. Is it only incidental expenses is discussed there? No. Any amount included in your value of supply. Already incidental expenses is wider. That itself will take care of every transaction. Upon this, he says with there, or any amount collected for anything done. Anything done means what? You say I do, then yes, it is covered there. Any amount for anything done for which if a money is collected by the supplier, then yes, that money will be included in your value of supply. We have discussed 3. Able to pay is paid by the recipient, that will be included. Third, all incidental expenses or any amount where the supplier has collected for something done will be included. Fourth one, which is going to be all those subsidies, all subsidies or which are received by them will be included in your value of supply. All kind of subsidy. It could be a government subsidy. All subsidies which are attached to a product would be included in your value, except only one thing, which is going to be your uh, government subsidies. Sometimes government used to give subsidy, but for government subsidy, all will be included in your value of supply. If any government from value, excluded, not included. You can call it as not included. You can also call it as excluded. At this moment, one small humble appeal. I could able to see some of you are finding it difficult to view it. I thought by this time you are all tuned, but my data analytics says no, it is not like that. So humble recommendation, reduce, if you could able to reduce or you know how to reduce the size of the video quality. On that center right corner you have a video quality button. You can reduce it, keep it at the original size of the YouTube, that would be better. And third, don't run along with me, come 3 to 5 minutes delayed, you will have a smooth session. That's all I can share. These are all learning experience that we have learned. People who have followed every day text me that the live session was awesome, live session is good, everything went on well smooth. So somehow we are running on different paces. Let me run 2 minutes, 3 minutes earlier. Allow me, a gentleman 10 years before practice, allow that gentleman to run 3 minutes. In any case, I cannot run more speed than you. Coming back here, getting into the discussion after your fourth entry, which discuss about all kind of subsidies. All subsidies directly linked with the product. Any kind of subsidy which is directly linked with the product, yes, that subsidy will be included in value. However, if that subsidy is given by central government or state government, then it will not be included in value, followed by a last entry, any penalty collected, any late fees collected, any interest on the supply is collected, that will also be included. So coming back here, 5 items we discussed. All these 5 items will be included in value of supply as per section 15.2. Now, points for our further discussion on this. How am I going to remember all this 5 entry? Don't ask me that. You are forced to remember all this 5 entry. Otherwise, I'll share you an acronym, PISTA. Remember this acronym called as PISTA, where P stands for penalty, interest, late fee will be included in value of supply. I stands for which are linked to the product will be included in value except government subsidy. PIS, T stands for all taxes and duties, cess will be included in value. A stands for any amount paid by the recipient on behalf of. Further point to note over here, however, this comes or this understanding comes from section 15.4 read along with rule 32A, a newly introduced rule. After the Kerala floods, we have, or the central government, oh sorry, I'll rephrase it. After the Kerala flood, the GST council has allowed the central government and will be collected by the state government, and this Kerala floods will be used for development of those disasters which has happened. Now the question before us is, will Kerala floods will be included in the value of supply? On a normal situation, Kerala transaction is a B2C transaction. It is not B2B. B2C transaction. In that case, they'll collect this cess. For example, if they're going to basic value is going to be 10,000 rupees, they collect 1% as cess. 100 rupees is collected for Kerala flexes. Now, technically speaking, 10,000 plus 100 on 10,000 100, We are liable to calculate what? GST. However, government has exempted Kerala says specifically, Kerala Flood says specifically by Rule 32A and made a point very clearly that Kerala Flood cess will not be included. After summing up with what will be included in value of supply, what will be excluded from value of supply, or what will not be included in value of supply. When we get into that discussion, what will not be included in value of supply, only one answer we will get: discounts are not included in value of supply. Whatever discount is given, then those discounts are not included in value of supply. All those discounts will not be included in your value of supply. Points for our discussion here is, in case of your any kind of discount, be it a discount given pre-supply or during the supply, or a discount given post-supply. Generally, discount will be given at the time of supply or post-supply. When a discount is given at the time of supply, only one request: ensure the discount is mentioned by the pen. You are going to run a conference, and for that conference, 1,000 people will come, and you are going to give everybody one pen. Then you will go to these shops. If this be the case, if you're going to ask him, then he will definitely ask a concessional rate. When he supply you the pen, he says, normally I'll sell it for 10 rupees. Because you are buying in bulk 1,000 pens, I'll supply you for each pen at a rate of rupees 7. That 3 rupees per pen multiplied with 1,000, 30,000 rupees is a discount. So total value 1 lakh, less discount, balance 70,000 rupees, which is going to be the value. If in this fashion, if the invoice is done, because this is a discount given at the time of supply. If in this fashion, if the invoice is issued, then that 30,000 rupees will not be included in value of supply. Let me repeat it. Nowhere government says you have to give so much discount, you have to give extra discount, this, that, and all. Discount is a complete prerogative of supplier. Supplier can give any amount of discount. The point that need to be noted down here is, in case of discount, the discount is given before supply, or sorry, not before supply, during the time of supply, reduced from value of supply. Done. If this be the case, for various reasons, certain transactions, certain business transactions are done in a process that discounts cannot be given at the time of supply itself. Because of a very simple reason, I will not know what is the quantum of discount or what is the amount of discount at the time of supply. In case of a company by name called as SAIL, Steel Authority of India Limited, SAIL has a discount policy, official policy, wherein which they say any person who buy from us more than 5,000 metric ton, not 1 kg, 2 kg, not 5,000 kg, 5,000 metric ton, 5,000 into 1,000. You multiply and get your numbers. A person who is going to buy first point is this, which we call it as quantity discount. Some other organization will say, if a person buy from us more than 5 crore rupee worth of goods, a garment company will come out and announce, if you are going to buy from us or take from us our branded stocks more than 5 crores, we will give you 2% as additional discount. Now, my question here, in the example that I've discussed, on the day one, you will not know. Let me repeat. On the day one, you will not know who is going to buy these goods. Will he satisfy these conditions or not? The point to be noted down here is, over a period of time, on a particular day, he will reach that point. The day in which he reaches that point, on that day exact, he is entitled for the discount, and a discount need to be given to him at that point in time. So the points for our discussion, a careful consideration here for our discussion is the day in which, let me repeat, the day in which that person achieves that number. He achieves buying more than 5,000 metric ton. He achieves buying more than 5 crore of rupees. That will not happen in month 1. That will happen in month 8. In month 1 to month 8, I would have issued some 100 invoices. Then I need to now give a discount. This discount is called as post-supply discount. Is it allowed, if you ask me? Yes, it is allowed, provided two conditions are satisfied. Post-supply discount is allowed, provided two conditions are satisfied. Condition number 1, there has to be a agreement which specify and for this discount. Let me repeat, a very, very, very careful point. Post-supply discount means, the careful point is, I say the post-supply discount is eligible, then law simply says that ensure whether there exists an agreement. If an agreement exists, and before even supply, both supplier and recipient know that they are eligible for this discount, and supplier has issued supplier has issued a credit note evidencing all those invoices to reduce the ITC, and the recipient, second condition is, recipient has reversed the ITC, then that post-supply discount would be reduced from value of supply. In case of post-supply discount, first I should ensure there exists an agreement, and before supply of goods or services, both supplier and recipient are aware of this agreement, discount, and every invoice that they issue is linked to the discounts, and more specifically, the supplier issues a credit note to the recipient, and the recipient who receives the credit note has reversed his input tax credit. If these two conditions are done, the discount, post-supply discount, is known to the supplier and recipient before supply, and the discount is linked with invoices. Supplier issue post-supply discount will also be reduced from value of supply. So, points for our discussion, as I earlier highlighted, if a person satisfy the two conditions spelled out in 15.1, his transaction value will be accepted. Apart from the transaction value, if he collects any money extra, then some money will be included in value of supply as per section 15.2. In case if he gives any discount, then yes, that discount will be not included in your value of supply as per 15.3. These are the broader discussions as far as your topic called as value of supply is concerned, and somebody has satisfied the two conditions of supply. For a moment, think in a flowchart model. Two conditions are satisfied, additions made, deductions done, you'll get transaction value. Two conditions are not satisfied, value will be determined as per valuation rules. Very simple, that's all. Condition satisfied, section 15 alone will take care. Conditions not satisfied, value need to be determined as per valuation rules. Before we getting into valuation rules, some small words that are used in the law we will discuss. Consideration, you all know something in written. The word does not use here a word called as consideration. Word used here is sole consideration. What do we mean by sole consideration, sir? If in case you are going to ask me, as I earlier told, the consideration should be only in the form of money, and that which is being signed for, agreed for, what they have agreed for, that alone will be treated as sole consideration. Similarly, if an activity is done and the consideration is not there, then it will not be treated as supply. For example, a person is providing a particular service, he is not in return collecting money, then that particular service did by him is not a supply at all. When it is not a supply at all, where is the question of valuation? So anything done without consideration is not a supply, but for Schedule 1 transaction. In case of Schedule 1 transaction, specifically told, even though you don't get consideration, it would be treated as supply. So that is how it has to be understood. Similarly, sometimes there will be non-monetary consideration. Will there be a possibility of non-monetary consideration? Yes, there are certainly possibility of non-monetary consideration. Someone will say, I will give you this right. Someone will say, I'll give you a promise that I will not do this. Someone will say, I will give a promise that I will do something. Whatever be it, points here is in case of your non-monetary consideration. Non-monetary consideration is also a consideration. Discount, as you all know, a value which is reduced from your value of supply. Bad debts. Is there is a difference between discount and bad debts in GST? Yes. Discount will be reduced from value of supply. Bad debts will not be reduced from value of supply. A very, very fundamental point. If I am providing a service, later I gave a 10,000 rupee discount and I accepted a check for rupees 90,000, then that value will be accepted as transaction value. However, I raised the invoice on one of the client and the client has failed to make payment. Then for me that value of supply is also gone, GST is also gone. Bad debts cannot be reduced from value of supply, whereas discount can be reduced from value of supply. Followed by, in case of your cost of goods sold, a wording that is being subsequently discussed in the rule, you have to bring in all those costs. We all know, recollected direct material, direct labor, direct expenses, production overheads, any cost relating to admin of all this will be determining you or bringing you, all of you, to determine cost of production, plus opening WIP, closing WIP will result in cost of production. Even in that way, or you follow the cost sheet model, or some of your all cost accountants, you are aware of CAS standard number 5, cost accounting standard number 5, you can arrive your cost of production. This concludes our first part in your value of supply. Sir, part 1 only over. Part 1 only. Then what is part 2? Part 2 of value of supply discuss about valuation rules. Now, we all saw a positive assumption that value of supply or every transaction will satisfy, let me repeat, every transaction will satisfy section 15(1). That is to say, the two conditions will be satisfied. That was our understanding. However, points need to be noted down here is, in case if the transaction is going to happen between related person, in case if the transaction is going to happen between principal and agent, in case if a transaction is done for other than money, barter transaction, or in case a exchange transaction, you get the old car, you also get money. All this will not satisfy section 15 condition requirement when value of supply cannot be determined as per 15.1, that is as per the earlier section, then value will be determined as per valuation rules. What are those valuation rules? Chapter 4 of CGST rules, which talks about determination of value of supply, discuss about your valuation. There you have, starting from rule 27, no, not 27, 20, 29, 30, 31. Rules, different purpose. In between you have 31A, now you read no. 32A, you have all those A and all A's and all amendment. All amendment are important. Okay, so come back here. Coming back here, you have valuation rules. That valuation rule, price paid is not the sole consideration. One of the condition under valuation is money paid is the sole consideration. If price paid is not the sole consideration, then value will be determined. Something very interesting to note here is, what could be the situation? I think we have already discussed. You are providing a service. After providing the service, you get a 10,000 rupee check plus one mobile phone. If this be your situation, then your value of supply is how to determine your value of supply. Section 15.4, let me repeat. Section 15.4, read along with Rule 27, comes out and says value of supply will be determined when consideration is not wholly money, then it will be determined as per Rule 27 only. When Rule 27 will be applicable? When the goods or services that you have provided, for which you received a consideration, that consideration is not wholly in money. A new car for 10 lakhs, being a car showroom, I get the old car for 2 lakhs and a 8 lakh rupee money. Very simple. I don't satisfy section 15 because section 15 requirement is my consideration should be a sole consideration paid in money. Here, my consideration is not wholly paid in money. In this cases, what would happen is you have to use Rule 27 and determine value of supply. Sir, how I can determine value of supply? Rule 27 has some 4-5 subclauses, A, B, C, D, E and all. I am not getting into each subclause wise. It will be little too much to you. So the crux discussion here is, generally value of supply will be open market value of the goods or services. Come on, understand. Nobody is doing whole consideration. Then the whole consideration value of that another car which I sold, I am a supplier here, the price at which same goods sold to another person, that will be accepted as a open market value. In fact, you have a definition for open market value which is below the rules as an explanation, or more specifically as per Rule 35. In its explanation, you will have this open market value definition where it simply says the price at which same goods sold to another person. But that another person is not a related person, and to that person it is sold wholly in money. That is to say, it should be a complied 15.1 transaction. Open market supplied for a full value in money. See, if you carefully word, money has to be paid in full, and supplier is not related, then he is referring to a successful section 15.1 transaction. So, as simple as that. Today, if I sell a car on exchange, I will refer this car last I sold to whom? I sold to somebody. For what price I sold? I sold it for 10,50,000. Now this car, how am I selling? I'm selling only for 10 lakhs because of various reasons. I'm not getting into reasons. I'm selling for 10 lakhs. Then 10 lakhs is not accepted. 10,50,000 is accepted. Generally, value of supply will be open market value. If open market value is not available, let me repeat, only in money, then only Rule 27 is applicable. And their Rule 27 makes the point very clear. When value of supply, when value of consideration cannot be determined, value of supply will be open market value. If open market value is not available, aggregate value, next sub rule says, aggregate value of money received plus monetary value of this non-monetary consideration. You got a mobile phone now. That mobile phone will have a MRP. That becomes the monetary value of a additional consideration or monetary value of a non-monetary consideration. So that 20,000 or MRP is 22,000 for our convenience. 22,000 plus 10,000 rupees received, that would be accepted as what? Value of supply. In case a situation, I have a additional consideration in my hand, I have a non-monetary consideration in my hand, and that cannot be valued. To my mind, rare, hypothetical. Because understand, whenever a person does something, always he will do same goods to another person. There itself value will be determined. Next case, second case, he would have received some money or he would have received additional consideration. When you aggregate it, that will be value of something. Even otherwise, if that miss, last option is like, kind and quality of goods or services supplied. Like this kind and quality, I would have supplied goods or somebody would have supplied goods, that value will be accepted as value of supply. If that is also not available, either learn too much. Okay. If that is also not available, government goes one step forward. We will determine value as per Rule 30 and 31. What is Rule 30 is determination based of cost. Rule 31 is residual method. When we go to Rule 30 and 31, we will read. For the time being, understand Rule 27 says if somebody does not satisfy the condition, law simply is sold, that value will be determined as per Rule 27. Rule 27 simply says, what is your open market value of the product? Sir, my open market value of the product is X. Then apply that to this also. Over. If open market value is not available, look at that word. If you see carefully, if you are following me in the presentation also, you can see specifically it would have mentioned. If open market value is not available, then only you can go for what? Value of supply will be aggregate value of money received plus your monetary value of consideration, additional consideration. If that is also not available, then value of supply will be value of supply of goods or services of like, kind and quality. What is this like, kind and quality? Means similar, means same. Maruti Suzuki Nexa Ignis car I sold. Maruti Suzuki Nexa Ignis car. Both are identical goods. This open market value, I can fix it for this. Okay, same. To the contrary, where I have a similar goods, a particular mobile phone of company X, same brand value, same reputation, particular mobile phone of company Y. Here, if you note, there's a difference. They have similar feature, similar characteristics, similar brand reputation. That is why they use a word called as like, kind and quality. Hope you could be able to understand why that word comes here. So coming back here, if in case open market value not available, aggregate value of money and non-monetary consideration not available, then value will be value of like, kind and quality. If that is also not available, value will be determined as per officer, before determining officer, costing. Costing or as per officer. Rule 30, Rule 30. Followed by moving forward towards Rule 20, going to be with related person. See, no organization will be interested in dealing with related party because you have today too many disclosures. I'm sure you all will agree to me. You have your accounting standard disclosure, which is part of your AS 18. You have your income tax disclosure, which will be part of your 40A to B. You have disclosures under Companies Act. You have disclosures under regular accounting procedure. Nobody is interested today to do related party transactions. But certain business organization, business model itself is like that. Directly, it cannot be sold to the subsidiary company because business model. It is a car manufacturing company. That car manufacturing company has its own showroom, not dealer showroom, own showroom. Through that own showroom, which is a subsidiary company only, they can sell cars. Business model. Let me repeat, it's a business model. Now, in cases like this, how to determine value? When supplier and recipient are related, how to determine your value of supply? Often this comes as one challenging area. Now, to this, Rule 28 and 29 gives you solution. Related person, we all know, holding company is a director. All these are all treated as employee, including members of same family. You all know. When this is going to be the situation, Rule 28 and 29 want to give a solution to this condition. If a person between distinct person, Rule 28. Rule 29 comes out and says, one. Rule 29 comes out and says that in case of supply of goods or services, hope you understand the need for both rules and how both the rules are different. Rule 28 is applicable to all type of related person, all type of agents. My connection bandwidth is poor here. I'll be able to know because I'm testing and monitoring that also. Yes. Rule 28 and Rule 29. As far as both the rules is concerned, if a person fails to satisfy the condition that buyer and seller should not be related or supplier and recipient should not be related, if you fail to satisfy that condition, law simply comes out and says he can be satisfied with the help of Rule 28 and 29, or he can overcome this difficulty by using Rule 28 and 29. Rule 28 is applicable for all related person other than other than agent. Related person and distinct person, it will be included other than agent. To the contrary, Rule 29 is applicable for agents only. In case of Rule 28, as usual, it simply comes out and says value of supply. In case goods are sold to related person, sell goods to relative, they will ensure one thing. I sell to third party also 350, my related party also 350. If that be the case, I don't find anything. As per Rule 28, they are out now. To a related party, same rate. To an unrelated party, same rate. Then matter ends there. Sometimes what used to happen in certain exceptional organization, to a related party they sell at 300 and to an unrelated party they sell at 350. Then by using Rule 28, which said what? Value of supply will be open market. 1 minute. Bandwidth is getting poor. 1 minute. Bandwidth is getting poor. if a company sell to an unrelated person at 350 and related person at sell to unrelated person at 350 and related person at 300, then as per rule 28 accepted for the purpose of this also. Now the point that I want to drive home over here is, if you have an open market value, then the same value will be accepted even for transactions with related party. A real challenge will come. They are organization who sell only, look at my word, only to related parties. Sometimes business. In business, we had a very successful MNC which was doing in this operation only. The subsidiary companies will sell only to parent. They'll never sell to outsiders. Very interesting to note. The subsidiary company debtors will be only one. Creditors will be 1,000 creditors. So you have businesses like that. In that cases, what will happen? Law simply told, if the value of open market value is not available, then value of like kind and quality will be accepted as value of supply. Now again, as usual, and doubt will come. Sir, the product that I do is not available anywhere. I only do that product because it's a monopoly product. Like that and all, it will not be costing rule 30 or. However, I want you to appreciate a larger, more important fact. All these are all not important. Then what is important now? Law specifically comes out and says, as long as the recipient is eligible for full input tax credit, let me repeat it. A limited supply goods to B limited. B limited and A limited are related parties. When A limited supply the goods to B limited, A limited in the invoice has mentioned 10,000 rupees and charged GST at the rate of 12% and collected 1,200 as GST. Now, B limited, who's a recipient, who receives these goods, B limited collects that bill, collects the goods, and B limited is eligible for full input tax credit. Whatever GST paid by A limited, B limited is eligible for full input tax credit. The second proviso to rule 28 clearly says, if the recipient is eligible for full ITC, whatever be the invoice, in invoice you charge one money, no, whatever be that number, that will be accepted as transaction value. Whatever money mentioned will be accepted as transaction value or value of supply if the recipient is eligible to claim full input tax credit. When the goods are intended for further supply by the recipient, then you can also go with another option, which will be 90% of the price at which goods sold by the recipient. In case open market value is not available, or this like kind and quality, or between related person, the value between related person or between distinct person, yes, the value will be accepted as any number as long as the recipient is eligible to claim full input tax credit. If the recipient is eligible to claim full input tax credit, then yes, whatever be the value mentioned would be accepted as open market value. Whatever number mentioned, supplier will charge some tax, recipient will claim credit for it, then whatever number mentioned would be accepted as open market value. Then only the ball will be moving, or then only the ball will be rolling. That is the purpose behind the law. So don't be much bothered if the transaction is between head office and branch office. In fact, for full input tax credit. Maybe your botheration should be high when the recipients are not eligible for full ITC. Then yes, we have to look for alternate method, such as 90% of the price at which goods sold by the recipient. A goods is purchased from the supplier, subsequently it is sold to an unrelated person by the recipient. Then law says the supplier's value will be price at which goods sold by the recipient to unrelated buyer. By the recipient to the unrelated buyer, what price he sells, that price into 90% will be the value of price. If the recipient is going to sell for 200 rupees, then to his customer, 200 into 90%, 180 rupees will be the value of supplier. In any case, to overcome all this, as long as recipient is eligible for ITC, then there is no issue at all. If the recipient is not eligible for ITC, yes, he will have some important aspects associated. Coming back here, getting into Rule 29, a very simple rule. Only in case of agents, this rule is applicable. How to determine value? Value will be, as usual, open market value. That is the price at which sold at the option of supplier. Let me repeat. 90% of the price at which goods sold, like kind and quality of goods sold, or open market value of the supplier. At the option of supplier, it can be done. If the supplier has his open market value, that will become what? Value of supplier. If the supplier does not have open market value, then supplier has the option to choose like kind and quality of goods into 90%. If both are not available, value will be determined as per costing or value will be determined as per residual method. Condition number 1, value of supply. Condition number 1, supplier and recipient should not be related. Condition number 2, price should be the sole consideration. When it comes to condition number 1, if supplier and recipient are related, if somebody not satisfies that condition or violates that condition, they have to come to Rule 28 or they have to come to Rule 29 and determine their value of supply. If a person satisfies the first condition, supplier and recipient are not related. They satisfied the first condition. But the second condition was a hit to them. The second condition was that the recipient, second condition was price should be the sole consideration. He has received some additional consideration. When he get a hit there, then this gentleman has to refer him to valuation rules by using section 15.4 and come to Rule 27, and as per Rule 27, he can determine the value. If you carefully note, all these rules and more specifically the sub rules has to be chronologically applied. If a value cannot be determined as per 27, 28, 29, then the value will be determined as per 30. Rule 30 simply says costing method. That is to say, cost of production plus 10%. If it is a manufacturing item. No, it's a trading item. If you say cost of acquisition plus 10, the cost will be determined cost of provision of service plus 10%. So it is cost of production plus 10%, cost of acquisition plus 10%, or cost of provision of service plus 10%. So end of the day, our discussion is, if 27 is not applicable to me, 28 is not applicable to me, 29 is not applicable to me, then determine based on cost. Or within 27, 28 and 29, I don't get satisfied by what is told there. I don't have an open market value, I don't have a like kind of quality, I cannot come, then value will be determined as per Rule 30. Rule 31 is a residual method, where the value will be determined by GST officer. When GST officer will determine value? When all 4 rules fail. Value cannot be determined as per 27, 28, 29, 30. Mark my word, then fundamentally there is a wrong in business. Because how much ever we go and analyze, Rule 31, residual method, is a rare method. Rarely used, not regularly used. Rare and the rarest transaction we will use. So, Rule 31 will be used by an officer. When value cannot be determined as per the above said 4 rules, 27, 28, 29, 30, value will be determined as per Rule 31, where the officer will use all the general provisions of section 15 and also use all those principles of natural justice scientifically will analyze or arrive a value of supply, which will be as per Rule 30. Sir, how scientifically you will analyze that and all? You ask officer. Don't ask me. Law does not discuss about that and all. He will arrive a value. The value determined under Rule 31 cannot be an arbitrary number. Arbitrary number means just like that. This product, 1,000 rupees. How you got 1,000? You have to explain to us. So it cannot be an arbitrary number. But for it, you don't have any challenge at all. So coming back here, Rule 27 will be applicable in case of additional consideration. Rule 28 and 29 will be applicable in case of a related person. Rule 30, if both the above three rules fails, we will use Rule 30. And if all four rules fails, we will use Rule 31 and determine value. This is how a value need to be determined in case of valuation. At this juncture, we will do one thing. We will end our session 1 a 10 minutes gap later by 11:50 or so, 11:50 or so. Originally scheduled for 11:45. We will start a 5 minutes late. After a 10 minutes gap, we will rejoin in session 2 live version by 11:50. Thank you all for your watching. Once we join, we'll take up some questions of earlier discussion and then get into place of supply and try to catch up what best we can do on place of supply. Thank you.